Welcome to MarketLens, where we break down the market, stock by stock. Today, we're diving into one of the hottest and most polarizing names on Wall Street, NVIDIA. NVIDIA has become the face of the AI revolution. From powering ChatGPT to fueling next-gen data centers, its GPUs are the engine behind the AI gold rush. But with the stock already up over 250% in just 2 years, many investors are asking, is NVIDIA still a buy, or is it dangerously overvalued? Let's dig into the numbers. In fiscal year 2024, NVIDIA generated an estimated $60 billion in revenue, nearly doubling from $40 billion in 2023. But what's even more impressive is their profitability. Net income surged to $22.5 billion, compared to just $11.7 billion a year earlier. Their EPS earnings per share jumped from $4.44 to nearly $9.0. That's an incredible growth rate for a company of this size. Much of this explosive growth is driven by data center demand. Companies like Microsoft, Meta, Amazon, and Google are spending billions to build AI infrastructure, and NVIDIA is collecting the toll at every gate. To maintain their lead, NVIDIA is investing heavily in research and development. In 2024, they're expected to spend over $8 billion on R&D, a jump from $6.5 billion the year before. This signals a long-term vision, especially in AI, automotive, robotics, and custom chipsets. When you compare NVIDIA with competitors like AMD and Intel, NVIDIA leads in market cap, reaching over $2 trillion, while AMD and Intel sit at $220 billion and $150 billion respectively. In terms of net income, NVIDIA outpaces both with $22.5 billion versus AMD's $3.2 billion and Intel's $10 billion. However, Intel still leads in R&D spending, a critical factor in long-term innovation. So while the valuation is steep, it's backed by dominance and profit margins unmatched in the industry. Let's talk valuation. NVIDIA trades at a forward P/E ratio over 50x, well above the tech sector average. While the growth justifies a premium, it leaves little room for error. Any slowdown in AI spending or a supply chain hiccup could trigger a correction. That said, it's rare to find a company growing this fast and this profitably. NVIDIA's biggest strength lies in its dominant position in the GPU market and its brand, which has become almost synonymous with artificial intelligence. Its high profit margins and strategic focus have placed it far ahead of traditional chip makers. However, this growth comes with NVIDIA is no longer just a chip maker. It's the backbone of the AI economy. Yes, it's expensive, but it's also delivering results that justify investor excitement. If you're a long-term investor who believes in the AI megatrend, NVIDIA remains a high-risk, high-reward opportunity, not for the faint of heart, but potentially for the future-focused. What do you think? Is NVIDIA the next trillion-dollar compounder or a bubble waiting to pop? Let us know in the comments, and don't forget to like and subscribe for more insights like this.